Hey everyone, welcome back. Happy Monday. Thank you for coming to my channel to check out my Monday market update. As always, if you're new here, I'm Caitlin McKegg. I am a real estate broker here in the Phoenix, Arizona area, and every Monday I give a market update talking about what's going on in the Phoenix real estate market to help you out if you're thinking about buying, selling, or investing. I get all of my data from the MLS here in Phoenix and the Cromford report, which I am a subscriber to. They analyze all this MLS data and provide it to realtor subscribers so that we can share it with our clients. So I come here every Monday to share that with you. And if you're already a subscriber, thank you so much. I appreciate you coming back every week. And as always, if you have any questions, you know where to reach out to me. So let's dive in. Let's talk about what's going on in the Phoenix market because I do have some big news. It seems as though there could be maybe the slightest beginnings of a cooling trend. Maybe don't get too excited. But we have seen one indication of something we need to follow and find out where it leads. So you'll see appear on the board, by the way, wrote all of this out pre-recording so that I don't have to do two things at once. So June 2019, that is up there because we are actually seeing for the first time since June 2019 that the number of active listings without a contract in Phoenix are higher than they were a year ago. And so we have not seen that stat in a while. January was the lowest number of new listings we've ever had in the last 20 years to start the year. And now we're looking at the fact that there's a higher number of active new listings this year than there were last year, and we haven't seen that since 2019. So we'll see if that turns into more of a trend where we start to see more listings come to market or more listings that are staying active rather than having contracts. I don't know. Again, don't get too excited, but it is the beginning of maybe something that we should pay attention to. So that's what I wanted to say about that. In other news, appreciation continues to truck right along, and it's really made an impact on the affordability in the Phoenix area, obviously. So in the last year, our monthly payments, if you're getting a mortgage, buying a house, have increased by 40% because of changes in interest rates. And with that, home values and appreciation in Phoenix have increased by 30%. So when you look at both of those factors, it makes it very hard to find homes to be affordable right now. 40% and 30% increase in what you could have previously been able to buy for when you combined the interest rates with the increase in our home values. So I don't know how much longer this is going to continue for. Again, this is something that we keep asking ourselves. Something has to give, and the more that values continue to increase here, the more it becomes less affordable to people living here, and you would think after a while people will stop wanting to buy homes, especially if interest rates continue to increase. At this point, we're not seeing too much resistance to that, maybe a little bit, and I'll get to that when I talk about the CMI, but right now that's not affecting anything too greatly. But those are some pretty staggering numbers in my opinion, and wanted to share that with you guys. Also, 1.9%. We have seen 1.9% appreciation in home values since December. So if you bought your house in December, woohoo! You already have 1.9% appreciation in equity in that house. That's awesome. And if you've been waiting and sitting on the fence, that's another 1.9% increase in home prices here. So things just keep moving, and you really have to decide if you're on board to dive into this madness or not. So I thought that was an interesting stat to share. So let's jump over to talk about the CMI. And if you're new here, the CMI is the Cromford Market Index. It's an index that they've created that helps us understand supply and demand factors in the Phoenix market. And the index is in a balanced market when we're sitting somewhere between 90 to 110. And anything over 110 is a seller's market, and prices will continue to increase. Anything under 90 is a buyer's market, and values will fall. We've not been anywhere close to 90, let alone 110 for a long time. So this week we're sitting at 474.6. That is up again week over week. However, it has gone up in a slower, a few less points than it has been trending. And I had that number, and I don't know if I have it in front of me any longer on my notes, but it has kind of slowed down a little bit, still increasing, but 2 weeks ago, we were like increasing in this number by leaps and bounds, and now it's increased, but not quite as crazy. So maybe we are starting to see a little bit of resistance in this market. I don't know. There's not enough supply on the market, and I'm sure buyers are very frustrated. I can tell you from my experience, it has been a very challenging experience with buyers over the last month. So I wouldn't be surprised with that experience plus interest rates increasing that we're starting to see maybe some discouraged buyers, and possibly that is affecting our CMI. With that, our demand is at 120.7. That's gone down ever so slightly. I think at the beginning of the month we were at 122. What that means is that we're 20.7% above normal demand. So 100 means is kind of your normal balanced area. So 20% above normal for demand. And our supply is 25.4, so that means we're about 75% below normal for our supply. So as I talk about every week, you have a lack of supply and you have a higher than normal demand. That's what really puts pressure on prices and has put us into the market that we're in today. So the supply that we are seeing right now, that's not changing all of that much. We still need to get some more supply to change things in this market, and it doesn't seem like that's going anywhere anytime soon. So I definitely want to watch demand, knowing the changes in interest rates and just knowing how prices are really increasing to where, you know, we're seeing 30 and 40% changes in what people can afford. It'll be interesting to see if demand starts to decrease a little bit. Not sure though, we've said that before, and in this market, sometimes things really surprise us. That being said, I also wanted to talk about the number of permits that we have for new construction, and I don't have that on the board, so I apologize. But just to give you a frame of reference, back in 2009, we were around the range of about 1,000 permits per quarter for new construction, and now we're at about 9,500 per quarter. So we're certainly building more than we were in 2010, which is good because we need it. But if you compare that to 1999, we were pulling about 11,000 permits per quarter for new construction, and in 2004 we were at 16,000 permits per quarter. So 9,500 is still very low. I'm sure you've seen some articles out there and headlines saying that we're overbuilding and we are pulling too many permits, and it's, you know, tripled, quadrupled since 2010 or whatever they want to say. And that's because we were at a low in 2009 and 2010. We're still well below where we were building back in 2004 and back in 1999. And frankly, we could probably increase the number that we're pulling each quarter so that we could keep up with the demand here. But there's labor shortages and supply shortages and all those other factors that come into play. So it's not like we can just build a house like that. So anyway, wanted to throw that information out there as well. I hope that this update is helpful for you. If you have any questions and want to talk about your situation specifically, you can reach out to me anytime, call, text, or email. My information is in the description below. I also have a link there to set up a time to chat with me. If you like to do that, that's the easiest way to get in touch. And otherwise, comment below, let me know what you think about what's going on in the market and whether or not you think this market is becoming unaffordable or unsustainable. I'd love to hear your thoughts. Thanks so much for watching this video this week. I appreciate all of you, and I will see you back here on Friday.